Two of the world's biggest economies, the UK and Japan, just fell into a recession. So what does this mean for the US markets? And I don't mean to be insensitive, but this channel mainly covers the US markets, the US stock market, and the US economy. So with these dominoes falling, historically, is there an effect that carries over to the US? Can we have a recession in a country that is so tied to the US, such as the UK, or a region such as the EU, and not have one in the US? We know that we already have a ton of markers that are telling us a recession is coming. But in this video, I'm going to be telling you why I do think a recession is going to come, but why I think the stock market can continue up for some time, and why it could be a bit of a delay before we get a recession here in the US. And with so many juicy opportunities, in my opinion, like Tesla, the only Mag 7 stock that hasn't hit an all-time high, has a ton of runway. Like the Russell 2000, the only major index that hasn't hit an all-time high. We're going to be talking about whether there is still a chance for some of these stocks to rally before we hit a recession. So let's get right into it. As I said, the UK and Japan finally fell into a recession. The long and short of it is they had two back-to-back negative GDP quarters. Q3 in 2023, the UK had a GDP contraction of 0.1%. And then in Q4, they had a GDP contraction of 0.3%. Japan, a little bit worse. So in Japan, they had a contraction of 3.3% in Q3. Then they were expecting 1.4% growth, but actually had another contraction of 0.4%. So firstly, I want to discuss, will this carry over to the US, the prospects of the US recession, and then I will get into the markets and what I think the markets are going to do in the midterm. So one thing I noticed when I was doing research on inter-country recessionary events is that countries or regions that are tied to the US economy more so than others, such as UK or the EU, they have seen recessions occurring in similar timeframes, but it's not necessary that one causes the other, right? So it's not necessary that the UK hits a recession first every time and then the US. We've seen both events occur where the UK will hit a recession, then the US will, or like in 2008, the US hit a recession officially in December 07, and the UK hit a recession in mid-2008, so it came later. But it is important to note that when we are looking at the recessions between the US and the UK, it's important to note that they do generally occur at the same time. So what I mean by that is the UK has never had a recession where the US hasn't. The reverse has been true, though, because if we take a look at the dot-com recession, right? So if we take a look at March 2001, November 2001, technically the UK wasn't in a recession. However, all these periods that the UK has fallen into a recession also occurred around the time that the US also suffered a recession. As I said, sometimes the UK goes first, sometimes the US goes first. But from what I can tell, at least in modern times, there has never been a recession in the UK without the US having a recession around the same time. That's important to note. Now, Japan is a whole other story because Japan actually had 3 lost decades. I know we refer to the lost decade, right, which is from 1991 to sometime in the early 2000s. But Japan really has had 3 lost decades where it has gone in and out of recessions from 1991 all the way until 2010. So I'm not even going to sit here and try to compare Japan or try to correlate Japan's recessions with the US's in the same way that, the UK and the US recessions have happened around the same times. So in my humble opinion, the UK falling into a recession is just yet another marker that I've been saying all along where I do think the US is going to fall into a recession. Another thing, median home prices. This is the worst drop in median home prices that I can see, at least on this chart that's going back to 1965, and this chart is by the Fed. The only other similar drop in home prices before a recession was before the recession that was actually caused or linked to mortgages, right? And that was in 2008, technically December 2007. And we are seeing this drop in home prices now. Obviously, that's not the whole story. Every yield curve is basically inverted. The important ones like the 10-year and 2-year are inverted, and the 10-year and 2-year looks close to uninverting. And when we uninvert, that is when we tend to see a recession. Now, some people like to point to this giving one false signal. And I think that period was in 1998 when the yield curve inverted just a blip and then uninverted. And it really wasn't until 2001 that we got a recession. But this was just a blip, right? When the yield curve tanks, like the way it has recently, like the way it has right before 2001, like the way it has right before 2007, like the way it has right before 1981, we've never not seen a recession once the yield curve uninverts. Now, here's why I think that the market can continue, the stock market, the US stock market can continue up until a recession happens, and why I think a recession can be prolonged. But before I get into the stock market, and believe me, you want to stick around for that, make sure that you sign up for our free trading mastermind webinar. This is a live session. It is not recorded. I'm going to be teaching it live. We usually do a few of these a year in order to give back and also give people a glimpse of what these masterminds are like. And we generally pack them. They're capped at 1,000 people. So we generally pack them, and the waitlist spots do fill up fast. So make sure that you get your name on this. It's absolutely free. It's going to be Sunday, March 3rd at 7 p.m. Eastern. Absolutely free. I'm going to be teaching you how I trade, how I do technical analysis, how I enter positions, my entry models. All right. So the 10-year and 3-month, this is the one that I'm looking at the most, because the 10-year 3-month has never given a false signal, even though I do think this hoopla about 1998 being a false signal is kind of stupid because, again, it was just a tiny little blip. But the 10-year 3-month is so heavily inverted still that this is out of whack. This is the most inverted that the 10-year and 3-month has been, even more so than the 2007 recession or before the 2007 recession. So this could take a very long time. We've never had a recession start while this has been inverted. It has to uninvert before a recession starts. So it just based on where it's at now, it could take months before this is uninverted. Now, this is terrible, terrible news. Why is that? Because if you take a look at CPI, and I covered this earlier this week, but CPI came in hotter than expected. It was expected to be 2.9. It came in at 3.1. What does this mean? This means that the Fed cannot cut rates, which is why you are seeing the March Fed funds futures bets 90% so that the Fed cannot cut rates in March. And this wasn't this high. This was almost zero just a month ago. It is now at 90% certainty that the Fed is going to keep rates steady in March. It is because the economic data is coming out strong. And this sucks because obviously the Fed doesn't want to keep rates here, because the longer they keep rates here, the more something is going to break. But the data is just not coming out healthy, at least from an inflation perspective. Now we still have PPI left to report. That's a whole other story. But if we take a look at the history of inflation, I've talked about this before, so many times in history, we were very close to that 2% mark, and inflation is just so stubborn that it takes forever to get it down to that 2% mark. So either the Fed has to continue raising rates or holding rates, and it takes years for it to get down to 2% or lower, or the recession forces it down, right? It's one of those two things. So if you take a look in the early 1980s, 1982, inflation was 3.8%, 3.8%, 3.9%, 3.8%. It literally took almost 5 years for inflation to get under 2%. And they had to keep rates steady. They were raising it and cutting it. It was a different time, I know. But they had to keep rates above 7.75% the whole time in order for that to happen. And we had just came out of a recession, right? Now, 1990 was a different story. So from 1987 to 1990, inflation was wreaking havoc as well. 4.4% all the way to 6.1%. And the only thing that lowered it is a recession, even though they tried to keep rates steadily high, right? It forced the economy into a recession. And that's the only thing that lowered inflation. And even then, it didn't get to a 2% mark, right? So inflation around this time can be so stubborn. From 1991 all the way until 1996, inflation could not get under 2%. And it took rates to raise and hold rates there, right? Until inflation finally got below 2%. So that is what we're seeing now is, as I said before, I think it's going to be so hard for the Fed to engineer inflation to come down to 2% before a recession. I think a recession is going to happen, and a recession is what is going to force inflation down, and it is what is going to force the Fed to eventually cut. That is what I think is going to happen. Now, before I get into the markets and talk about actual stock market levels, how shallow or deep will the recession be? And here is where Uncle Z will tell you, I don't fucking know. Because nobody knows. A recession is literally the most impossible thing, not only to predict when it's going to happen, but the duration it's going to happen. And not only that, there seems to be no correlation between the length of a recession and the length of a bear market, just none. So you can have a pretty long recession at 18 months and an equally long bear market. You can have a very short recession at 8 months and an extremely long bear market. And then you can have an insane recession at 43 months and a bear market length of 5 months. So there is no telling here. I cannot tell you how deep the recession will be. That is because nobody can predict what will actually cause a recession. In my opinion, I think it's going to be something in commercial real estate. I did a video on that before, and that is something for another video. So I don't want to get into it. But I think it's going to have to do with commercial real estate and the refinancing that companies are needing to do at these insane rates. The fact that office properties are declining in value because of these high rates, and the fact that there is a lot of vacancy in office properties, and the fact that regional banks have a disproportionate number of commercial loans on their books because the big banks are smart and are not over flooding their books with commercial loans, right? I think JP Morgan's commercial loan percentage of their loans is like 5 or 6%, whereas some regional banks is upward of 20 and 30%. So what is going to happen to the stock market? As I said, I think it could be a while before we hit a recession. And I think that the stock market has a lot of juice left. Now, you might be saying to yourself, well, the Mag 7 is extended. Yes, the Mag 7 is extended. But what tends to happen when the S&P hits an all-time high? Let's take a look at it. We have the data. What tends to happen, I have the S&P 500 in this blue line here. What tends to happen when the S&P 500 hits an all-time high, right? And we haven't yet dropped into a recession like now. So we hit an all-time high here. For instance, on the S&P 500, IWM then follows. IWM is just the Russell 2000 ETF, right? We saw the same thing here in 2015. IWM followed a few months later with an all-time high. We saw the same thing here in 2017. S&P all-time high, IWM followed all-time high, right? We saw the same thing here in 2021. S&P high, IWM high a month or two later. So we just hit a high on the S&P 500, right, in 2024, in February of 2024, which is when we are recording this. I think that Russell 2000, as long as we don't hit a black swan between now and, when we get a recession, because the black swan is going to put us into a recession if we get a black swan, and nobody can predict that. So as long as we haven't hit the black swan yet, I really think the path for IWM is all-time highs. Now, this is good because IWM is still 20% away from all-time highs. Now, would it surprise you to know that we already got into IWM on November 10th? I'll show you the exact alert here since it is an old alert and there's nothing you could do about it now. There was something you could do about it in November. Like I told you, join the best group online. IWM, we jumped into November 10th, 2023. November 10th, 2023 was right here. This was November 10th, right? Let me just remove the S&P 500 real quick. This was November 10th, right here, right near the bottom. And we are now up on IWM almost 21%. But I do think that IWM has a little bit more juice to go, barring that we don't hit a recession, right? You look at Tesla, which I sent out an alert, and I did this on Twitter, so it's no secret, but I sent out an alert when Tesla was in the low 180s. We just crossed 200 today on the news that Elon Musk has 20% ownership in Tesla, whereas before it was thought that he had 13, right? I do think that Tesla can continue up. Now, I don't think Tesla's going to hit 400 because I think that a lot has to be priced in for Tesla to hit 400, such as robotaxi, such as full self-driving, right? I think those things need tentative dates. The investors are now just completely exhausted from expecting this stuff and not seeing it. So I do think those need tentative dates, but I do think Tesla does have a little bit of a run in it, right? So right now what I'm looking for, if it's not clear to you, is I'm looking for ignored value. Russell 2000, Tesla, there aren't a lot of things. I did and I will continue to send out what I'm investing in into the Discord. So make sure to get your name on the free mastermind below. The Discord is closed. As I said, I gave you guys a lot of heads up for that. The Discord right now is closed. It is going to be waitlist only. So you will see a link down below to sign up to the free Discord. And on the free Discord, I will be giving you I do provide some alerts and some analysis, but I will give you a heads up of when we open up the live Discord once again, which will likely be towards the end of the month. Anyway, traders, that is it for this video. If you got something out of this video, leave it a big fat thumbs up. Let me know if you agree below. I love a good faith discussion on whether you agree or not. So let me know in the description below. Do you think we are going to hit a recession in 2024? Are you in cash? Do you regret not buying the dip back in October of last year? Are you continuing to invest? Are you now scared to invest? Are you taking profit on your positions? I want to know it all. Leave it in the comment section below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.